the $1 Million Mortgage Experience podcast.
All right, welcome to the podcast. Today, we are with the special guest, Joey Roquet. He is a vice president and top producer at Secure Choice Lending. They are a Riverside-based mortgage company, and he's been involved in the mortgage industry since he was 19, so he got in young, been in it over 15 years now, and you worked your way up from mortgage loan assistant all the way to branch manager. You were just saying that like when you started with Secure Choice, it was just two of you.
Yeah.
And then you've grown it to over 120 people now. So you know all the products, the scenarios, you're crushing it right now. That's why we're having you on the podcast. So welcome to the show.
Thanks, man. I appreciate it. Like greatly.
Yeah.
Glad to be here.
This is great because we want to hear from our listeners, and not that you're listening to my podcast, but you should. But people like you, maybe who are not necessarily crushing it like you, who want to crush it, are listening to this podcast, and they're trying to find ideas, trying to find ways to enhance their business. We just do this free for people so that they can get awareness of products and ideas of how to originate. So that's why we wanted to have you on. And
thanks, man. I appreciate it. Seriously.
Yeah. So tell us more about Secure Choice
Secure Choice Lending.
Story. Yeah.
So I mean the quick, like Mark Hostler, he's the broker of record of Secure Choice Lending.
Cool.
He started it out of his guest room in 2017.
Okay.
He actually started on the wholesale side as an AE.
Okay.
So his entire knowledge of the mortgage world was on the wholesale side.
Gotcha.
Started at SunWest, grinded, crushed it. I mean, right out of college, I think he was top 5 at SunWest, like very quickly, right?
Nice.
And he quickly realized that a lot of the mortgage brokers in the United States, he was more intelligent and just, you know what I mean?
They weren't willing to put the work in, maybe.
Right.
Like, yeah.
Well, and the thing is when you're on the wholesale side, technically you do have more people working for you.
Right.
Without paying them.
Sure.
You
have like an army of people.
Yeah, you have an army of people.
Yeah.
Right? And they want to get their commission checks too. So what are they going to do? They're going to make sure they answer their phone call. They make sure they're going to help you structure.
Right.
Right? And all this stuff. And Mark's sitting there like, and I remember him calling me. I've known Mark since 5th grade. So we actually were rivals, and I'll go into that later. But I've known him since 5th grade. He calls me. He's like, man, like, there's not many brokers out there that are that smart. Like, and the barrier of entry into the broker world is very minimal.
Well, you don't need a college degree. You don't need to have any major accomplishments. You just need to pass a test.
And get going.
And then get hired, right?
Yeah.
And willing to work for free for a while.
Create a couple relationships and you're done. Like, that's the truth. So Mark was like, man, I'm past my brokers. I'm going to just create my own little broker shop. And at the time, he was trading, stocks and crypto. And I mean, it's 2017, so it's a great time to do both.
Sure.
Right? Going into the next 4 or 5 years.
Right.
Well, fast forward a year and a half, I had been doing loans since right out of high school. So I played 1/4 of college golf.
Okay.
And
did you literally, like in the summer of your high school graduation, go into loan business?
I went into Provident Bank and I was a teller for 6 months.
I was a teller in the beginning too.
Yeah, so I was a teller for 6 months. So technically, I mean, I started in probably February-ish of 2009, right?
Okay.
That's the truth. But I went straight to Provident Bank, great bank. We were super aggressive underwriting-wise. There was
good rates. I remember Provident.
Great rates, right? Comp structure was still good, but leaner, right? Because even when you have good rates.
You said 2009?
2009.
That's a terrible time to be in the business.
It was perfect. What are you talking about?
It's great to get into the business.
I learned the worst of the worst. Right.
So you only knew that. That's
I
all
only
you knew.
knew it.
Yeah.
Yeah. So, and the gentleman that brought me in, Jon Maddux, I mean, every step of everything I've ever known has been from the foundation he set. That's the truth. He'd been in the business for 20, 25 years. He taught me that your purchase business was your base salary.
Yep.
Your refis were your bonus checks.
Yep.
You never focus on that. Even in 2021, volume was exponential on the refi side, right?
Huge. Best
I mean, my purchase business was 52%.
Wow.
Which is ridiculous on a refi 95% market.
Most people were 80%.
Correct.
Refis.
Refi.
Yeah.
So, but those are just the little things that I learned from him. And literally, I owe my career and maybe another Freeman Sawyer is another big mentor in my life. Those two guys, they paved the way for me. That's the truth.
Shout out to them.
Yeah,
cheers to them.
Seriously.
Yeah.
So Johnny took me in. I started as the assistant's assistant. I mean, sometimes I vividly remember, and if he's watching this, he'd laugh. I took his kid to a CIF golf match one day. He was like, "Hey,
how old was he? His kid?
His kid went to Santiago High School. John Jr. I believe he was a junior in high school.
And you're like, you got to see this.
Yeah.
This golf.
And he was like, well, I can't go. You need to drive him there because I can't go. And Jan, his wife, they had 3 other kids, so she had to take care of the kids. He was at the office. He's like, hey, I need you to bring him to CIF.
Yeah.
So like that was my job. Like I was literally the assistant.
You were the runner.
Yeah, I was the runner. So that's where I started. But what was cool is I started on the processing side too. So I knew guidelines.
That's key, actually.
I knew guidelines before I knew how to create relationships. I knew how to structure income deals, all that. So there was a lot of really good. But started on the banking side, moved forward, and I was went through a couple spots, NAF, and I was at Skyline Home Loans, which is Freeman Sawyer. That's the gentleman I just mentioned.
I think I've heard their ads. Skyline.
Yeah,
Radio,
Skyline.
a lot of radio ads.
A lot of radio.
Yeah.
We did it, and we had a bunch of value propositions. But at the end of the day, like Free taught me just a bunch of really good business mortgage mindset.
Okay.
Period. Right. And the owner of Skyline was Bill Dallas. He was a member of Blackstone.
Yep.
And so we eventually got bought out by Finance of America. Finance of America, great company. You know, they had a lot of really good positive things, but I just felt like I didn't fit there. Right. It was a little too corporate. Trying to get the loans through is just, you know, as an originator, it was a little tough.
Yeah, because they probably wanted you to fit in perfectly in these boxes where it's
Correct.
like,
corporate margins and profit to their investors felt more important than us closing loans, right?
Yep.
So I got married younger. I was 24. My wife was 25.
Yeah, it's young.
And this was December of 2018. I was contemplating getting out of the mortgage business. I had 4 or 5 deals going. Skyline, like I said, just got bought out by FAM. And my onboarding paperwork took 35 days. Like, I didn't even know what my email was.
Do you even want me?
Yeah. So at the end of the day, I was like, so I called my buddy Mark. And
the one that's in his basement, or in his
spare bedroom. Spare bedroom. And the best part is the name of the street was Foxhall.
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 Okay.
So we'd go over to the Foxhall, and I'd drop off like loan app or whatever, and I'd be like, hey man, I went to him, and I vividly remember it because I came from the banking and the retail side.
Yep.
The one thing they teach you is brokers suck.
Dude, we don't say that on this podcast, but they do say brokers are jokers. Yeah, brokers suck. Yeah.
But that's the
they
truth.
can. Some
right?
of them. Some of them do. Yeah.
Well, just mainly, especially then too.
Yeah.
Like now
they're all great.
Now but back then I'm sure it was different because that was when the broker
thing about any
collapse
business
happened.
is, right, you're going to have the good ones and the bad ones.
Yeah.
And unfortunately, they're more bad ones than good ones.
Correct.
Yeah.
And so I was like telling Mark, I was like, listen, I got really good relationships with my realtor partners who sent me these deals. What expectation am I going to have to set? You know, do I need 45 days? Am I going to tell them, hey, it's going to be back and forth and it's going to be a train wreck? What do I tell them?
Yeah. How do I set the expectation?
Yeah. And he literally laughed at me. He was like, you're an idiot. And he closed every single loan, 21 days or less. I got paid double the commission. And that's how Secure Choice Lending truly started.
In a spare bedroom with way better than
Foxhall,
expected results.
Riverside, California.
Wow.
So,
and now you guys are 120 plus?
Yeah, we have 120 plus employees at the company, including like LOAs and processing
But you
staff.
guys grew this was mostly, the growth was last year, right? Or like
growth
21,
was last year.
Or 22.
22.
Which is a hard time to grow when you have high rates and...
Yeah. And
or it could be a good time to grow, I guess, when people are falling out of other places and you show them a way.
And that's kind of where me and Mark had a conversation in January of last year, and it was, are we gonna cut and maintain and survive?
Yep.
Or are we 32 years old and are we gonna try to change the game? I guess you could say.
Yeah, we're young. We got the energy. We got the...
And it was cool because there was a lot of people that trusted us. And at the end of the day, that's the most important piece. Because, I mean, you come from uber success through the companies you built and created, and people
and
have to believe,
failures.
And suffered failures.
Yeah.
But people have to believe in you.
Yep.
Right?
Yep.
And it's hard to also believe 232-year-olds, right?
Yep.
Where Secure Choice Lending technically had been around for 3.5 years. Right?
Yep.
Let's just say January of 2019. January of 2022 is 3 years.
Yep.
You're telling me that
the hardest time,
a 3-year-old company, through the pandemic, with two 32-year-old cats. I don't have a college degree.
Yeah.
Right? The only thing I know is mortgage.
Yeah.
That's the only thing I know.
And grit. You've got some grit.
Yeah, well, I appreciate that. But, you know, and we're grateful and we're thankful, because if not, we wouldn't be where we're at today. You know, we had a couple really, really I have people like Karen Virgil. Karen used to be my manager, right? And now we're partners or team members, right?
Yeah.
And that's what's cool is like, you know, there's a lot of people you would never go work for someone that used to be your boss, or like, you know, or flip the other way, right? You were their boss, now they're your boss. It's not, and we don't. It's
not normal,
and we don't look at it that way either.
Right.
Culture is the biggest thing at Secure Choice Lending, and I think that's also what helps grow.
Yeah.
You know, instead of pulling you in and say, hey, no, John, the way you're going to make this deal work is you're going to have to take a pay cut on this deal, but don't worry, at least you won't have to dip in your savings. Maybe you can make your payroll this month. No, instead, Secure Choice Lending was like, no, let's get this deal done, and we'll take a pay cut.
Yep.
And that's never been a mortgage mindset ever, right?
No.
What's been nice is the broker side. It alleviates a lot of our costs.
And if you're a broker, you can also do borrower paid comp, which then you can take.
Correct. You can take it out of the
Yeah.
pay cut, right? But our margins are tight, and the only reason why we're allowed to do that or able to do that is because you have other companies that take that pay off of the plate.
Yep.
Plain and simple.
Yep.
So, I mean, it's been fun.
Interesting observation for me is, you know, going from two guys in a spare bedroom, which is my first mortgage company was a retail mortgage shop. And I started it with a guy who I trained, got in the business. He ended up finding someone that could get us like $500 flat fee, you know, broker fee. And so we were able to use that broker's license and start a mortgage company out of my spare bedroom.
Got it.
And we went from, it was just me and him with a really amazing letter. Like we had this marketing letter that was like the golden ticket, like Charlie, Willy Wonka.
Willy Wonka.
And,
the golden ticket, baby.
It was like the golden letter. I mean, it literally was a pay option arm letter, right?
Got
it was this like low payment, and everyone was like, I want that. That's what I want. And it was like 2001 when we started it. So, but the thing that interests me is that you went from 2 and then relatively very quick to 120 in a market that's super tough. So, yes, you have no college degree. Yes, you're young. So you have energy, you have abilities, you guys have, out of the box thinking. But like, I mean, with the rates like that, most people look at this as like, okay, I think you had also going for you is you started in the mortgage business when it was terrible, right? So you didn't know. So I think that on the flip side, some people start in this business when it's super easy, low hanging
100%.
fruit. And so they don't get that grit. It's kind of like a I don't know if you're a wine guy, but like
yes.
So the best wines are from the vines that have been through the most, the hard times, right? The hardships. So
Thick skin.
Right?
Thick skin.
Thick skin. Yeah. And I mean that's really what makes, I think, the success in the future for whether you're doing real estate, mortgage, whatever it is that you're doing.
Yeah.
But like, walk me through like in say like 2022, rates are shooting up every week or every day, and you guys are bringing on people, and your volume is going up. I understand.
So let's actually just make it even worse, right? Just for the whole economic standard. We bought a 62,000 square foot office building in December of 2021. 62,000 square feet.
Shit.
Every single person in the world.
Wait, when the pandemic? Like,
yeah.
Okay.
Office is dead, right?
Yeah, people don't want to go to work. They want to work from home remote.
So the owner of the building, they had some other properties. They're a big $1 billion flip company out of the East Coast, and they'd bought this building in 2019, and they were in the middle of demo, right? And COVID hit in March 2020. They stopped everything, so they had the 5th floor completely down to studs. We're talking no HVAC, no electrical, no fire sprinklers, no nothing.
Wow.
Cement floors.
Jeez.
Okay. 5th floor, half the 4th, half the 3rd, quarter of the 1st. So we have 4 offices, and we're like, and we were growing in 2021, but nothing like 2022. It was like we went from 28 team members to say 55, and then we relinquished some or some left, right? Because in the 4th quarter of 2021, it did slow down.
Yeah.
I mean, we definitely felt that, right?
Right.
So we ended the year probably with like 48-ish, 45 team members, right? And that happened we're in the middle of construction. It took a year to complete. We just got the sign off a week before Christmas this last year.
Okay.
So it took 1 year for construction complete.
Wow.
We have our ops on the 3rd floor now, sales on the 4th floor, all of that going on. But in the midst, we had people calling. And it started with
Outbound calling?
Inbound calling, because I made one relationship. And it started from there. Aaron Jimenez from Neo Home Loans.
Okay.
We had to do a cross call together. We created a great rapport. We'd start bouncing stuff off each other, guideline scenarios, pricing, underwriting issues. And then all of a sudden, me and him were just going to lunch, having fun, right? And then come to find out, Aaron's branch has like 3 or 4 guys that one of them went to high school with, one of them used to work with. So we start creating more relationships, right? And then eventually, we looked at our platform compared to their platform. We had a great opportunity to make them more money, better product, better interest rates.
Right.
Let's just say same service, right? Because they had really good service. And faster turn times. It's like...
all around better.
It's a win, right?
Yeah.
And that is the one domino.
They came over?
That drastically fell. From there, some other heads got wind. We got some Corona guys from, Summit Funding.
They all wanted to come work
great
for
company.
Secure.
The whole branch left.
Yeah.
Yep. And it all started from pretty much one conversation. And it's crazy because all you really need, and if you think about it too, it's just like one extra referral. Buddy of mine, Matt Piller, he's like, he taught me at a young age, make one more call on your way home. Just make one more stop.
Just one more.
Just one more,
yeah.
right? And isn't there a book, The Power of One?
Yeah.
Right? Or The Power of One
yeah,
More, or
why not?
whatever it is. And that's the truth. One thing could turn into exponential growth. Because if it keeps doubling down, eventually where's it at? Right?
Yeah, you're doing one more than the next
And it
guy.
truly started with just that one. And then I realized, like, I get it if they were making a lateral move, but we have people who've sent us letters or notes or Christmas cards that are like, you've changed my life.
That's huge.
You've made me more money than I've ever made in my entire career, and they've been in the business for 22 years.
Jeez.
And
it feels good, man, because we're not saving,
No, we're not saving the world.
No, but we're
changing,
selling money, and
yeah.
everyone can do the same thing. But when you create something that actually, you change someone enough to them tell you that.
Yeah.
Like, I've had people tell me that in my life. Like, I've been in this 25 years, and of course, I've brought people in the business, and people have told me that. But like, when you hear that, it's almost better than the money that you make. It's like
100%.
It's like,
well, and the thing is this, and this is what I keep telling. Like, everyone's like, well, what's your goal with Secure Choice Lending? My goal with Secure Choice Lending is to make it the best mortgage company in the United States with Mark, and with, we're going to need partners. You can't do things alone. You know that.
Yep.
You need partners. You need partnership. I'm great at a lot of things.
Yep.
But I'm also really bad in certain areas, right?
And to recognize that is huge. Just, that's the majority of the battle. It's like,
Yeah.
okay, I need someone to help with this area because I suck at it. Yeah.
But what's cool is, like, if you talk to anyone, like me and Mark are the ultimate yin and yang, and that's just from like the me and Mark perspective.
Yeah.
But we have other people at the company, like say Brandon or Levi or Jared, that they bring things to the table that even me and Mark can't or don't have time to, because when we're handling certain issues or certain growth aspects, there's only 24 hours in a day, right?
Yeah.
So it's been fun, man, to bring everyone on board.
I got to dig in deeper on that, because it sounds like to me you guys have a great ops. If you could,
phenomenal ops.
So to do that, you had to hire the right people.
Mm-hmm.
Do you have like a culture guide, like the way you hire? Is it like built around like they have to be this type of person, or like, or is it just kind of, hey, I like you, you fit in with us, or what's that secret? What's
funny? The secret is technically I'm the culture guy.
Okay.
Yeah. We don't have like a coach, hoorah. You know what I mean? Like
But
I walk in the morning, and the first stop I make is the ops floor.
You kind of high five everybody.
Every single person in the morning, I tell them good morning.
Nice.
I ask them how their morning's going.
Okay.
Can I get you coffee? How we doing today? What's going on?
Servant
what can I help you
leadership.
with? Right?
Yep.
And Mark tells me all the time, because that's why we're great, is because he checks me and I check him, or we just help each other.
And
grow,
that's your
right?
strength. And I'm sure is he more introverted or no?
Oh, he's 100% more.
Yeah. So
compared to me?
Yeah.
Yeah. I mean,
so that's not his. He wouldn't do that. Like, he would just. Is he like kind of?
No,
like
he's
meant like thinking and.
He is strategical.
Yeah.
He is legal. He's counsel. He is.
Yeah.
He's that aspect, right?
What you need that yin and yang, like you said. Yeah.
And But also, the one thing that he always will never forget, and that's the one thing that I think a lot of mortgage companies lose, is when the people up top stop working for you, is when you'll never have a successful company from that point on.
Yeah, they got to know that you're willing to put in the hours.
Correct.
You're willing to put in to be right beside them and do all that stuff. Yeah,
Correct.
Yeah.
And
you hear the story about the Mavericks and what's the guy's
Cuban?
Cuban, yeah. He when he bought the Mavericks, I just heard this like yesterday or 2 days ago. He bought the Mavericks. Right away he put his desk not in some window corner office. He put his desk right in the center of where everyone else was. So he was like. And he made the calls. Like he was right there making the calls. All the previous, like, oh, you've been to a Mavericks game. We made some changes. You can come here, and it's going to cost you less than a McDonald's meal. And he'd make these calls alongside everybody.
I did not hear this.
Yeah, and then that's what helped the Mavericks just like
blow
the whole.
up.
Yeah, and then he obviously made amazing changes at the stadium and all that. But that's the way. That's the way leaders lead, right? The true leaders lead, like Alexander the Great was in the thick of it with everybody, right?
By example.
Yeah, by example.
Not, hey, do as I do, right? Or do as I say, not as I do.
Right.
Right?
Because people won't be as loyal to you if you do it if
No.
you're that way. If you're high and mighty off in your corner office.
Especially in the worst mortgage economy in the history of the United States.
So you attribute your growth to you just being there with your team and just fighting alongside them and saying like
Every day.
Like we're gonna crush it. We're gonna and finding people that are like-minded.
Guidelines, scenarios, open door policy. Call me whenever you want. Call Mark whenever you want.
Yep.
I mean, there's no like hiring handbook. You know what I mean? Like, but at the end of the day, like what's been cool is we have turned loan officers away.
Yeah.
We really have, because culture is king. I don't care who you are.
Yeah.
You could have $1 billion company, and if you have one cancer run through it, it's over.
Sucks,
right?
Yeah. I've been through those. Those are not fun.
Yeah.
You gotta fire quick, right?
And
hire slow, fire quick.
Yeah, exactly. That's right.
Yeah.
So
find the right people, then you don't have to fire.
Yeah, and like you're talking about ops, right?
Mm-hmm.
So ops.
Because if you have good
what separates us is most broker shops. The best part is a lot of broker shops are like, yeah, we have our own operations staff, right?
Yep.
They're third-party processors that you just pay. And if Megan down the street doesn't want to work for you anymore, Megan doesn't want to work for you anymore.
And if she's on vacation,
every single person at Secure Choice Lending is on Secure Choice Lending payroll.
Yep.
And we treat them like family, right?
That's
because
smart.
Also, John Swarzak, right, the guy that brought me in, you realize quickly that the people that close your loan are more important than you. Because if you didn't have you didn't have them, you ain't closing your loan. You can bring in 100 leads a minute.
Yeah, that back end is huge.
Huge.
It's like, it really helps.
Huge.
Yeah.
And so going back to like the structure of Secure Choice Lending, right?
Mm-hmm.
I came from retail. Mark came from wholesale. We wanted to create the best of both worlds. We're a hybrid shop. We're not a broker
And you're
shop.
a lender, right? You're a broker lender?
We have our we're mini correspondent. Yep. We have our own warehouse line. And so I thought the great parts of retail were the support staff of marketing, right? Mm-hmm. Most broker shops don't have a marketing department.
No, there's like your own.
You can go pay someone down the street.
On your own pond,
right?
Yeah.
Go on Etsy, right?
Right.
No. So we have full-time videography, photography, marketing director, real estate market. She came from a real estate team, over 10 years experience. So, I mean, what does that help? Our real estate partners.
She speaks the language. Yeah,
perfectly.
She knows.
Right? She knows legal.
She's got the mind of a realtor, so she knows
correct.
What they want to see, what they want to hear.
Right.
Yeah.
So
that's what's helped us as a wholesale lender is that I have 20-something years plus of being a mortgage broker experience.
Yeah.
And when we started wholesale, we kind of did the opposite. It was like we wanted to start out by saying, what are wholesale lenders doing wrong, and how can we make it more appealing to brokers?
Yeah.
And I'm like, I was the broker for the longest time, and this sucks. So we changed it up, right? I think that's what helped FundLoans. Yeah.
And that's what's cool is because you guys have created something special. Yeah. And you guys are obviously not as in the infant stages that we are, right? But when I'm like, hey, Mark, I think these 3 things from retail were phenomenal, and he's like, well, these 3 or 4 things from the wholesale side were phenomenal.
Yeah.
And we were able to join the two, and it's always a work in progress. Like even now, we're always tweaking things.
Yep.
Because innovate or die, right? If you're not always trying to get better,
you have to.
Someone else is.
Always.
So
they're going to outwork you, outthink you.
So that's just been like the things we've been really working on is what retail aspects are phenomenal, what wholesale aspects are phenomenal, and how do we mesh them perfectly without getting, because what's the one, in my opinion, I call it a fault, but what's the one fault of the retail model? It's a little too fat, right?
Mm-hmm.
The middle management, extra people that don't originate, they don't bring profit to the business, but yet they cost the business a bunch of money. Those guys can't be there. Right? If you're going to supply the rates that we supply. Yeah, we can supply half to 1% higher rates.
Sure.
But at that point, our LOs suffer.
Yeah.
Right? Where's the fine line of the people that bring you money?
And what value are they bringing, really?
Correct.
It's like,
so back in the day when you had I remember you remember the ACO files?
Yeah.
That's my first job. I learned how to ACO the file, the paper.
Right.
DU 1003 credit report. I remember the whole thing, you know what I mean?
Yeah, what was the thing that you'd take and you drop the drop of, the broker, it was the box that you put it in.
Yes.
What was it called? It was the something box.
I want to call it the app box, but I mean, it was
I think
in essence.
we did away with it in like 2012. But it was like a, anyway.
It was in essence the package.
Yeah, you'd stick it in the drop box, and it would but it was a physical box, and then it would deliver to them the next day.
And you'd pray you got your underwriting approval, and they looked at it correctly the way you did.
Right.
Because there wasn't too much communication.
Yep.
But like back then I got it. Like that made sense. Because we also had a guideline book.
Yep.
Quarterly. Came out, Fannie Freddie, FHA, VA. We'd get it and you'd go page 175. Let me look up variable income, right? Mm-hmm. So I get that. That's why you needed the non-producing manager, the non-producing like regional manager.
Sure.
All those people that help support staff, right?
Right.
You don't need that anymore. I go on my phone right now and type Fannie Mae variable pay income guideline, and I have my guideline right there. That right there saved every mortgage company 25% profit margin.
Yeah, you have to hire those people.
Correct.
Yeah.
And at the end of the day,
trust them because sometimes they're wrong.
Yeah, for sure. Well, also, you have other overlays and stuff like that, so you need to know each investor's stuff. But I'm just saying, like that side of things, I think if you haven't adapted, to the technology age of mortgage, then you're behind the times. Mm-hmm. And I think truly that's been the biggest growth aspect of what we've been able to do is because we were lucky enough to create this during the technology side of things.
Sure.
I was lucky enough to be in the retail side. Mark was lucky enough to be in the wholesale side. Mm-hmm. And we took the shining moments of each because neither model is like blanket dead.
Yeah.
Right?
Yeah.
Everything has its worth, right?
Yeah.
But hopefully we found the perfect of both, which we'll never find the perfect because we'll always be working on to getting it better.
True. So, you got to keep making it better, right? So just talk product. You clearly have a lot of products, right? You have non-QM. Mm-hmm.
With you guys?
With us and I'm sure others. But like what has been like a hot product for you guys this last year?
Hot product. Bank statement has been big on the non-QM side.
Yep. And that's a great product for referrals. So like if you want to go out and get a lot of referrals, the bank statement's the best product because because like the banks don't offer it. So you can go
none of them offer
all day long. Like if I was starting out scratch, didn't know anything, but I knew my guidelines or knew how to talk to people. Mm-hmm. Even if I didn't, I'd start going to the banks, asking for referrals.
Yeah,
because all their turn downs,
they can't close any of the loans.
Right.
So it's free money from the turn downs.
Yeah.
That's the truth,
and
right?
You can't pay them. It's against the law. So
exactly.
You're not going to cut into your pay.
But also,
and they're happy
still a customer of the bank, right?
Yeah, and and you're not a depository, so you're not going to take their customer away.
Right.
Which maybe like a First Republic could do,
right?
Because they're a little bit more out of the box than a B of A or a Citi or whatever.
Yeah.
But like, I mean, the bank statement products. So keep going. Bank statements.
Yes. So bank statement on the non-QM side is huge. DSCR.
Yep.
Which is the debt service coverage. Right. That was drastic as well because what was the one thing that really kind of hindered people in the last year was they did take the PPP loans and all the other stuff, and they probably wrote off things that really weren't there.
Sure.
Probably.
Yeah, and they didn't have a lot of taxes. So
so they were like, hey, but I do want to get my Airbnb.
Yep.
I have the down payment.
Yep.
As long as the payment is washed out by my rents.
And they all have good credit.
Everyone has good credit right now.
I remember for some reason when I first got in this business, everyone had bad credit. Well, I was working at a
Subprime?
subprime lender,
Yeah.
but everyone had shitty credit.
In 2009 when I started, it wasn't so good either.
There's like all these 560, 610, 586. And now it's like, I haven't even seen it. Where are they? Like, where are the people with the shitty credit? They're out there, I'm sure, but I just don't see them.
Yeah, there are, but it's far and few between. And that's probably just, think about it. The amount of
we've had good times.
Amount of cash we've been fluxing into everything, it
people
helps.
kind of learned about credit. Like when I got in the business, probably people didn't.
Yeah.
What, I have a credit report? Like, didn't even know.
What is credit?
Yeah. Because you'd have to, it was like a simile that would come through, and it was Equifax. And it was like, but now I think people have probably been more educated.
Yeah,
like some of the apps out there, like what Credit Karma, like that stuff.
Every
right?
single bank in the world.
Right.
I log on to Wells and there's my credit score.
Yeah.
So
people are more aware.
It's more aware,
and they're cognizant about it. They want to keep it good.
The one thing though that I can't stand about misinformation about credit is people are like, I don't want to pull my credit because I don't want my score to drop, and I'm like, that is the biggest lie in the history of the world.
And that loan officer that told you that, good for
is,
him.
Is scared that you're going to go shop him.
Right,
That's what's going to happen.
That's exactly
Like, hey, don't go anywhere else because your score might drop.
And then you might not qualify.
Yeah. And if you don't qualify, it's because you're quarter higher in interest rate. No, actually, it's because that guy's scared he's going to lose your business because he is a half higher in rate.
And you're going to get a half lower with someone else.
That's the one thing. And I actually just talked to a buddy of mine, Robert Wetzel.
It used to. At one point, if you shopped too many times, and then they changed it, like if it's within the same industry, it doesn't hurt your credit.
Yes.
But I remember back in the day, it would affect your credit score.
That was one of the good things, and I'm not a big believer in any government intervention. Like, I think it's just bullshit, right? But that was the one thing that when the CFPB and all the rules came about with lending and practices.
That was a good thing.
It was a good thing.
That.
You know why? Because it allows the good guys to win.
Right.
And it allows the consumer to win.
Right.
If you started with the guy that's selling, say, 7 on a regular deal, right?
Yeah.
And down the street 6, but now your credit score is going to drop 25 points.
Yeah,
that wasn't
that's not
fair
for the consumer.
Right?
Yeah,
but now you have what, 30? I think it's is it 30 days or 60 days?
Within a time period, you can pull it. Yeah,
yeah.
I think it's 30.
I think it's 30 days, right? So you can shop literally 100 mortgage companies within 30 days, and I think that was a good thing that they.
Yeah.
And it doesn't change your score at all.
Right.
That was completely off tangent, but.
That's good to know, though.
Yeah.
Like that's old information.
It's old information.
Yeah.
But
people still think that.
It's like the old wives' tales. It's like the
Yeah.
When you're getting the sex of the baby. It's like, oh, put it on your hair and
then you'll know it's a girl.
It's a girl. No, it's just luck.
Yeah.
But
because one person was right one time.
It was gold. After
Everyone
that.
thought, yep, for now on, that's
my wife. We're pregnant with our 4th son right now.
Oh wow, congrats.
And thanks, man. And
you're building a team.
Yeah, well, 4 for 4,
like
and I had to talk her
team.
into the 4th. I wanted a girl. Didn't happen. But we're done now. But every single time, like all the old wives' tales, everyone's been wrong.
Gosh, I believe it.
You know what I mean? Yeah. That's what I mean. Hey, your credit score's going to drop 75 points if you rerun credit.
Yep.
Not true.
And that's the thing about salespeople. Unfortunately, we have the honest ones, and then you got the ones that are really good at like kind of making gray areas sound real right, and then you got the ones that just flat out lie. And then when the flat out liars lie, then you're like, how can I even compete with this guy because they're just lying?
And it makes us look bad.
Yeah, and then
because we're all lumped in.
Yeah.
You know what I mean? I remember when I grew up golfing, right?
Mm-hmm.
Canyon Crest Country Club, right down the street from my house. Super cool family club. It wasn't like very crazy, like
it wasn't like super rich,
the normal
but it was
country club. You know what I mean? And I remember getting into the business, and I'd hear some of the guys talking, members-wise, like, "Oh, you're a loan guy? Those scum."
You guys are the bottom of the barrel.
POS. Yeah, I mean, like, and I'm like, I guess some guys are, but it just depends on who you are, right?
Yep.
You can be anything, and you can change the mold on that.
So tell me what you like and dislike about non-QM. I mean, I know
what I like about non-QM.
Yeah. Clearly you like the bank statements and DSCR, but like, obviously out of the box kind of lending. It's nice to have as a tool.
I clearly set expectation.
Yeah.
Because being where I'm at, everyone calls me for every scenario, right?
Yep.
If it's a little out of the box, a little quirky, they're calling me or Mark.
Yep. Are you talking about like realtors or just referral partners?
All of our loan officers.
Oh, your internal.
Yeah,
LLs,
and other people like from other places too. Hey, we can't get this done. Can you help us?
Mm-hmm.
Right.
Mm-hmm.
The first thing that comes out of my mouth is, listen, you set the expectation correctly.
Yeah.
I had to do a cross qual. Do you know what a cross qual is?
So, which is something you have to do in this business. Yeah.
Especially right now, right?
Right.
Because loan officers are just throwing everything against the wall.
Right.
So I get the phone call from the other loan officer that's submitting the offer on my buddy's listing, and I'm like, hey, they're doing a non-QM P&L only.
Yep.
She's like, yeah, we can close in 21 days. And I was like, listen, it's non-QM. I don't give a shit if you've got it already pre-underwritten.
Yep.
I was like, you never set that expectation. Just letting you know.
Yeah.
Let's say 45 days.
That's
If you
part goes back to the lying. Like
Correct.
You're gonna get the deal because you said 21 days. Then you're in too long.
Yes.
And you're like, oh, we got 10 more days.
So
They're
I
not
tell
gonna
everyone
leave.
up front, 45 days or better.
Yeah.
Okay? Because if we close earlier, guess what? We succeeded.
You won. Yeah.
Yeah. But if not, we met expectation. So I told her, I said, listen, that's all great. You did your whatever. And she had this big hoorah package. I was like, that's cool. I said, but let's talk about, the P&L. I said, is it audited? Did
Sure.
you self-prepare it? What's going on? Because
Yeah.
that also can cause issues. Did the bank statements match?
Yeah.
You need some stuff,
CPA,
right?
yeah.
CPA certification. She's like, well, I did my due diligence. I was like, okay, great. So I called my agent. I'm like, listen. I said,
Red flag.
I said, you guys, there was only offers 1.3 million, right? Which is pretty much the prime of what non-QM is right now.
Sure.
Because a lot of the big self-employed guys and gals, they don't want to pay taxes in California at 58%, 52% in the highest tax
I
bracket.
think that's part of being the benefit of being self-employed. Is you can do
100%.
your bottom line.
Correct. You know what I mean? But you still can make the money that actually warrants,
you can
warrants
pay
a
car
house
and yeah.
of that nature.
Because you can't afford it, you just sometimes choose to leave your money in your business and stuff like that.
Correct. Yeah. So I called my boy Oscar, and I'm like, hey, I said, you'll close this loan. I know you will, but don't expect 21 days. Just set the expectation to your sellers. Plan on 45. So we'll see how that one goes. And I guarantee you, I know it'll be 45 to 55 days. It's
Right.
not with you guys. I forget who it was.
I mean, we're faster right now than that.
Oh,
but-
way faster than that. But the questions that she couldn't answer, I knew she wasn't closing it that fast.
Yeah.
But the one thing that I tell everyone is set the expectation is what I was getting at.
Yep.
My loan officers called, they're like, hey, bank statement, 12 months, 24 months, right?
Yep.
DSCR, what kind of ratios we're looking at. Just set the expectation up front. Because no one just wants to be not lied to. That's all it is. Tell the truth.
Yeah. And if it,
You know what I mean? And then once
if
you have that
if you're
set,
honest, people sense the honesty.
and then but once
too.
you have that set, then you say, hey, and besides that, you wouldn't be getting this deal done unless it was for fund loans.
Right.
Because Fannie wouldn't touch it, Freddie wouldn't touch it, VA wouldn't touch it, FHA wouldn't touch it, right?
Yeah.
So what's the other option?
Yeah. Someone
Right.
that just is gonna hope that you get in with Fannie or something.
Pray to God.
Yeah.
Right?
That's not a good strategy.
No. So set the expectation of what's truly going to happen.
Yep.
But also remind them the reason why your paycheck's still coming is because we have avenues like fund loans to back us,
Yep.
right?
Yep.
And so that's the one thing I love about it is you have more of a creative solution,
Yep.
right? Instead
Yep.
of just your typical box, you fit or you don't.
Yep.
You can't move that box. That box is here.
Yep.
It's not moving.
Right.
But in your guys' world, we can get on the phone. We can talk to underwriting.
If it makes sense, right?
If it makes sense.
Yeah. Well,
Yeah.
and you look at it and you go like, well, this guy clearly doesn't make the money, or all of his deposits are PPP and they're like their transfers, and so like you really know if someone can afford it or not,
Yep.
And if there's a story behind it and you can make sense, and the reason why I wanted to start a company like this is because I remember there was one scenario that stands out, I'll never forget. It was a guy that had I think he had $1 million cash sitting in the bank,
Mm-hmm.
and I think he was a veteran, and his house was like a 40 LTV.
Mm-hmm.
The guy had $1 million in an IRA. He had probably 18 months reserves and just cash. And this guy, I was trying to get him a loan, and his DTI was so high, but I'm like,
You just couldn't get it.
I was like, because of the ATR rule, right?
Yeah.
But I was like, but he could take the $1 million and just every month could make his mortgage payment for the next 20 years.
Literally for the rest of his
Yeah,
life.
what are you telling me? He doesn't have the ability to repay this loan.
Yeah.
And the underwriter's like, yeah, we can't do it. I'm like, this is wrong. And I just was like, I have to start a company. I have to figure a way to do this. And then now we have the asset depletion.
I was gonna say the asset depletion is huge.
It's huge.
Because even Fannie Freddie's rule isn't that.
Right.
You know what I mean? Fannie Freddie, you have to have it in there for at least 24 months.
You got to start pulling it out, taking the money. You're like,
bunch of
that
stuff.
doesn't.
Yeah, at that point. you might as well not even you just pay cash.
Yeah.
Seriously, pay cash for the house. Right? But a lot of people don't want to because it'd be nice to have that. Maybe they want to go scoop up a rental property or two, or maybe they. I mean,
have money in the bank.
Have money in the bank to go on vacation. It's a weird thing, right?
You don't want to be house poor.
Yeah. So no, 100%. That's the one thing I like. The tough thing, but you guys know, like we've had this discussion 100%, is, it's the guidelines aren't like the typical guidelines.
It's hard to know them. Yeah.
They're a little more temperature based. Is what I mean. You know what I mean?
Sure.
And so unless you're a seasoned loan officer, or you once again
experience,
understand what you're getting into.
Yeah.
You're not gonna but it says this. But also like keep reading.
Yeah. There's a couple bullet points that you missed.
Keep going, right?
Yeah.
You just don't do the first calc. You got to make sure there's sustainability, and and then there's underwriter discretion. Underwriter discretion is key because, like you said, hey, there's a deposit. Well, but I counted that in my deposit. It's like, PPP loan.
Yeah.
How many of those have we seen in the last?
Or that was your birthday gift from grandma.
Yeah.
One time thing. Right?
One time. Back that out. I'm sorry. You know what I mean?
Yeah.
So when you have rookie loan officers, or just the ones that came in during the high tide, that it was low-hanging fruit and it was easy, and they didn't fully understand the product that they were selling, that's when non-QM gets a bad rap. It's kind of just like, say, anything in the retail side with certain things, and anything on the wholesale side. You know what I mean? Everything, like I said, has great. And also everything gets a little bad rap here and there. Cause we're also dealing with hundreds of thousands of dollars from people's livelihoods.
Right. Oh, it's a big deal. Yeah, it's emotional.
It's very emotional.
Yeah. So what do you tell these people who are used to the low-hanging fruit? They're used to this easy way of doing loans. What do you tell them when you're like, look, there's business out there. It's non-QM business. What do you tell them? Like, how do they overcome this mentality they've been used to and easy? I think it's. Can you help them or no?
Yeah, I think it's as simple as get back to the basics.
Yeah.
The reason why is because, I left my phone outside, but I can just sit here and text you like, hey man, hope you're doing well. Hit me up later. How easy is it for you to ignore that text?
Easy.
If I walk in your office,
right,
shake your hand.
You can't ignore that.
Bring you a bottle of tequila.
See, now you're pulling. This is like the old school AE mentality,
but
which is probably where your other.
But that's where I learned.
Partner,
yeah, that's where I learned. But people, and everyone's like, oh, that's old fashioned. The technology. I love technology to replace non-existent things that we need anymore. Right. Human to human interaction is not ever going away.
Right.
You want a robot coming in here and shaking your hand?
Depends on.
Yeah. Right.
No, I mean,
but you know what I mean?
Yeah, you can't. You can't.
That will never go away.
Right.
We are who we are. Me and Mark talk about this all the time. There will be a point where underwriting, processing, docs, funding will all be automated,
right,
or very automated. Yep. With a
very
10% limited human touch.
Yep.
The one thing that will never get replaced is a loan officer. I firmly believe that. The reason why is, if you're a first-time home buyer, a second-time home buyer, or a 10-time home buyer, it doesn't matter. You're going to want to know, why am I going to do this product? What is the reason why you as a professional is putting me in this circle instead of this circle?
Yep.
Why do you think I should pay mortgage insurance at 10% down and not put 20% down and keep the other 10% in the bank? Is it like an improving market? Is it decreasing market? What are the reasons that the human mind, the expert that has done this, what are those reasons?
Oh, they're going to try though. AI is going to try.
They're going to try, but they'll never replace it. I don't give a shit.
They're going to try. They're going to probably get it 30-40% right.
Yeah,
so they're always going to need this.
They're going to crumble.
Yeah, it's gonna be like only 30-40% will get through, and then you're gonna need that broker for the lot longer. It's gonna be like, I think they're gonna try to first be like, Alexa, get me a mortgage.
Correct.
Right, and then they're like, oh, we have your locker here. Do we have authorization to open your financial locker?
Yeah.
Yes.
Give me your
Alexa,
security code.
Open it up. What's your security? 4442, whatever.
Yeah.
And then they're gonna open it up. Okay, you're approved for a whatever rate, right? And we can close in 10 days. And then, oh, sorry, why didn't I get the loan? Because something popped up, right?
Right.
But I know they're trying.
They're trying.
They are trying.
But in our world, like I said, I mean, it's already getting more simplistic that way. Yeah, I mean, like
Yeah.
it just
They-
from
I mean,
when I started, the non-producing branch manager, the regional, the vice president of the division, the region, whatever you want to call it, they're not needed anymore. They
Yeah.
were needed then.
Right.
They needed to report back to corporate to make sure that they were aware of what was going on in these branches under their hubs.
Right.
You don't need to do that anymore. We hop
No.
on a Zoom call.
Zoom, cameras, everything,
Right.
data, KPIs. Yeah.
So that's the one thing that I think will eventually take over the mortgage side. We're still going to need, the one thing that I always say and what gets a lot of loans through is the ORs. OR is the best word in mortgage.
Or tell me why.
I need a pay stub or a W-2. I need this or that. When
Is that even a thing? Can you do that?
100%.
Like, I don't do any Fannie Freddie.
So like legitimately, like, so your DU or LP will come out and say, hey, I need a pay stub, most recent pay stub.
So Fannie will kick this out like on a DU?
Oh yeah.
It'll
It
say
says
you only need this or that?
I need a pay stub or a verification of employment.
Interesting.
And if you truly have an investor that has no overlays, this is the
They'll
John,
take
get
it.
this. I'm not shitting you. This is God honest truth.
Wow.
In 2021, I probably closed 30 to 40 loans with 3 items. Driver's
No
license.
wonder my buddy, so I have a buddy, he's my tequila partner.
Mm-hmm.
He closed like 48 loans in 1 month without a processor, just him by himself. All probably Fannie refis, right? I'm like, how the hell did you do this? Because my last, retail experience has been like, gosh, probably like before 08, right? So so with this like streamline, with these like, now that I know that you could do that,
Yes.
like wow,
Yes.
three conditions.
3 conditions.
No wonder LOs
Submitted
are so
driver's
lazy
license.
and they don't like
Driver's
they don't like
license,
non-QM.
why, right?
Yeah.
Identification, got to make sure you are. Insurance, you got to make sure the property's insured.
Right.
And-
Appraisal or no?
Well, most of the time we were getting appraisal waivers, right? In
Because equity.
In 2021, I mean, it was equity peak of the history of the United States, right? The only other thing would be a VOI through the work number, because that's satisfied. Because also on the work number it says if you're employed or not. I wouldn't even have to do a verification of employment at funding. Wouldn't have to do it because it was good for 10 days. And if I had driver's license, the insurance, the VOI done, I was CTC in 1 day, clear to close in 1 day. My verbal VOE was good for 10 days. CD on day 4 or 5, whatever it was. Docs by day 8, funding, you're good.
Damn.
But that's true Fannie Freddie
great.
guide.
Yeah, that's
I'd never had that either at Provident, at New American, at Skyline.
That's just a no overlay Fannie.
That is a no overlay Fannie Freddie loan. But also, you can only do that if you're base pay. You're not using overtime.
Sure, you're not
what I mean?
self-employed.
Right. So there's, that's not like it's cake everywhere, right?
But if you find those buyers and those borrowers,
Correct. And
it's great.
they are out there.
Yeah.
But that's the only time, personally, I think those are the people that will replace LOs.
Yeah.
Is I'm going to refi, I'm going to lower my payment.
Click a button.
They
I'm
can done.
Pull their credit and all their.
Cool.
Yeah.
And at that point, it is what it is. That's transactional.
Yeah. They're just going to, the ones that are going to stand out are the experts that have really
Correct.
understand where to put
How to
something
make it work.
Yeah.
But yeah, that's the crazy part, right?
Yeah. Well, give me like a success story where like a non-QM loan saved the day.
Non-QM loan saved the day 90 days ago. It was the asset depletion. We had a borrower, she inherited money.
Lucky.
Yeah.
And if you think about it, it's not really
Yellowstone?
lucky.
Yellowstone?
Like, yeah.
Like legit?
Yeah. Oh, I love that
Property
show.
in Yellowstone.
Yeah. Oh, sick.
Mineral
Montana's
rights.
awesome.
Mineral rights.
Wyoming or Montana?
It was in Wyoming.
Okay.
Mineral rights.
Wow.
Yeah.
So like way back from her ancestors, probably, or her grandfather, like
it was
like a family property.
Great grandparents.
Yeah, they
Down
suffered
the
a
line.
lot to get to that.
Down the line.
I said lucky earlier. I take it back because the ancestors weren't lucky, but like for her to be born there took a lot, right?
Yeah.
Them to travel across the country.
Yeah, they sell, like in essence, to like the BPs of the world.
Yeah.
Yeah, but if they even exist anymore, but
Save the day with a showing
So-
like an asset depletion.
well, she just got her royalties going. But Fannie Freddie royalties are different, right? So you got to have history, you got to have tax returns, all the BS.
Did she complain about the rate?
We don't have that anymore. No, because at the end of the day, it was either that or private money at 14.5%.
Right, with like balloon and
Correct.
got to pay more points then and
12-month balloon.
Yeah.
Problem is we can't do a 12-month balloon because
owner occ.
we need 2-year history
Yeah.
to get those royalties, or it was a trust annuity. It was convoluted as can be. It was through a trust annuity money. It was crazy. So we need 2 years tax returns, no matter what. It doesn't matter.
Yep.
And a 12-month balloon wouldn't work.
Right.
So that's one that saved the day.
I love non-QM.
And what's even crazier is we just had one that no one else would do too. It was just the simple DSCR, but a lot of people are capping at the ratio of like what's the worst one? Is it 1.15 or is it 0.75?
1.25 maybe?
1.25. That's like the worst side?
Yeah.
Because non-QM had a big crunch.
Or no ratio, yeah.
Right?
Right.
Well, we were at a 0.85, and it allowed us to get the deal done.
Oh, wait. I think
It's,
I'm
you know what I'm saying?
Yeah,
So
So
0.85 is
right?
correct. We won because I think it was 1.15 is what we were allowed to go to.
Yeah, or 1. Like people do, we'll
One.
do 1. But under 1, usually you go no ratio.
Got it.
So
But the
maybe
rate
jumps up. Yeah.
jumps drastically
Right.
higher. So we didn't have to have the rate jump. And that 1%, they were like, well, at that point, why would we buy the property?
Yeah.
So it was out in Scottsdale. And you know how that market, it's hot for 9 months. Like hot as in money-wise.
Right.
But the 3 months are in the summer. Not too many people are really kicking it out
Nobody
there.
wants to be
The
in
snowbirds,
Scottsdale
dude,
in the summer.
snowbirds love it.
They do, like Canadians, right?
Yeah,
they come down.
like the other
They all
the other
melt.
9 months, but jeez, yeah. So no, non-QM it's done a wonder for us. I mean, I think me and Mark looked at it. 12.5% of our 2022 volume was non-QM.
That's how much?
12.5%.
Gotta get that up.
Well, I mean, that's drastic compared to the 1% that it was in 2021.
Yeah. Well, because
I mean,
you
think
probably
about
had so
that.
much good business with the rates low.
Yeah. Yeah.
But I think this year, it could be higher.
I mean,
we can get higher.
This 2023,
Yeah.
I expect it to be 28%.
Yeah,
Seriously, 20%
maybe
of our
25.
business.
Let's get to 25.
25. Hey,
I'll
know
help
what?
you. I'll
Challenge
help you get there.
accepted. That's all I got to say.
Awesome. Well, I love hearing your story, the grit, all the ideas, just the confidence that you have a good thing going on. So I just want to congratulate you
Thanks,
on that. This is the first time we've met. I know you send business to my company, so I appreciate the business. We're not here to promote my business. Really want to obviously shout your business out, but we're here to just give tips to our listeners and give them hope. This to me is hopeful because there's a lot of doom and gloom out there.
Well, and this is the thing, John. I firmly believe this year is going to be the turning point of what we see. Yeah. Every recession, we're the early indicator. We're the leading indicator of a recession.
Housing,
Housing is always, and we felt this in quarter 4 of 2021. Mm-hmm. We've been in this for 15 months.
Yeah.
I got buddies who are in commercial that are like, oh man, we're now feeling it. What's the last indicator of a recession?
Yeah.
Commercial.
Yeah.
Okay.
Yeah.
So, that means we're full circle. We're now here, and we are now going to come out of it.
Yep.
Plain and simple.
Yep. So your prediction is no real recession 23, or you think it'll bounce back?
Residential will not feel a recession.
We think we're through it. And
I think we are through it.
It's on
yes.
commercial. And
Commercial's got to settle out.
Yeah, that'll settle out.
Banking's got to get money again.
What really saved us is the freaking builders did something good. They didn't go out and build too many single family
many homes instead.
They didn't do
like
that
last time.
They built a bunch of apartments. Mm-hmm. That was where their focus was, which was smart because there is obviously a big focus on multifamily and
huge.
People have to rent.
Well,
right?
that and we all know the cost of building.
Yeah.
You can't build a single family.
You can't.
You need multifamily, or you're not even going to be profitable.
Right.
So it did kind of work in our way incidentally.
And everyone that has a low rate mortgage, which I would say, I'm guessing, but like 70% of homeowners took advantage of fixed low rates.
Yeah, 70%.
At least, maybe more, hopefully more. And they're sitting on these really nice low rate 30-year fixed that are, why would you ever give that up?
One reason. What's the one thing that we are at an all-time high?
Equity. What else?
Consumer debt.
Which is why I like the second.
Correct. And then what happens when you have a second?
You got to consolidate.
You have a blended first and second ratio. Right. So say your second's at 7.5 because prime rate's now up.
Yep.
You have a blended rate at 7.5, say for $100,000. You have a $400,000 first at $299. That's 20%. That's 40%. You're probably now at a $399 blended.
Yep. So
right?
then when the dip.
So when we're at 4.5 to 4.99 interest rates, everyone's like, that's not bad. My payment goes up $35, but instead of paying interest only on my second, now I'm paying principal.
Yep.
That's the first thing that always
and not
happens.
having all these payments. I just want one payment.
Pay off the credit cards.
It's like history repeating itself. I remember when
What
I
are
got
the
in the
odds? Wait,
business.
is that true?
Yeah, I guess it's true, right? It happens.
I'm telling you.
One of the best things that I remember in this business is I remember I got in the business in like 97. I was selling 10 3/4 firsts with 6 points and seconds, like 90 LTV seconds at like 14.99 with 8 points or 10 points, like a lot of points, right? And I remember like just, I was that's how I got introduced to the mortgage business.
Yeah.
And I was like, this is amazing. I'm making commissions. And then the next thing was, so then we'd do this. We'd never sell rate. You couldn't sell rate, right?
No.
You'd have to basically do
Hey,
this.
I got a 13%. That's not selling.
No, you just sell payment and
Yeah.
you list their debts, and then you'd list, the new payment, and then it'd always save them $500 a month, whatever, and they were stoked. And then the next wave was seconds, like they did the 125s. I didn't do a whole lot of those, but we would do seconds, and then we would consolidate. The rates started kind of coming down, consolidate the first and second into a new first. So it was like you just do these.
It's like the book was written before.
Yeah, and so this, now it's like do a bunch of seconds, not because you love those commissions, they're lower, right? And you're doing the same amount of work.
Yeah.
But because you're going to have that client for life, and then you're going to do another loan for them, and they're going to be so thankful.
In 12 months, 18 months.
And you're basically investing in your future.
Yep.
And you got to be nimble and find new products and.
So going back to it, this isn't bad. This is great. If you were here still, you made it.
You made it. Yeah, we're almost to the other side of the lake.
I mean, that's the truth. You've made it. There might be quarter one, quarter two will be a little hazy depending on how good you work at your business.
Yep.
Right?
See how much the Fed raises or doesn't,
I mean, you saw that article on Yahoo News. They were like, Fed won't ever cut rates this year. It was so doom and gloom. 100% they will.
Yeah. They're going to have to.
100% they will.
Especially then going into an election year, they're going to do it. But,
correct. But yeah, I mean, I think it's going to be good.
And I grab my crystal ball.
Yeah, exactly. Dude, we'd be billionaires if we knew, right?
Yeah.
But I mean, the history does repeat itself, and this is cyclical. The United States economy has always been cyclical.
Yeah.
It's written in the walls, man.
Yeah.
I really think by the end of the year we'll be selling 4.99 conventional Fannie Freddie. Non-QM will be somewhere in the 6.99, 7.5 range.
Yep. Let's hope.
You know what I mean? And at that point, you have people who.
Well, non-QM is only usually about 1.25 higher than Fannie. So let's hope we get back to that, right? Like 4.99 and 6.25 or something.
Yeah. So 6.
Yeah.
But I mean, at that point, that's a healthy market. I think the 2.99 was actually not healthy anyways.
No, I mean that was free money. That creates these bubbles and stuff. I mean, if you're in the 4s and 5s and 6, like if you're like a historical average, you're
solid.
Solid.
So I think it's been great, and I think if you work your ass off, you're going to make some money this year.
So you optimistic about 23?
Very optimistic.
You gonna make more money this year than last?
100%, if not double.
Love that.
Yeah. So
if you're not in that mindset, guys listening, like, come on, get with the program. This is hopefully you got something out of this podcast. Please like, share, subscribe. Please support us in just by commenting, reaching out here, and just listening to more of these, sharing them with your friends. We're here for you guys, and we're here to help you grow your business. And
John, thanks for having me, man.
Yeah, appreciate you coming on.
This is cool.
Yeah, absolutely. All right, see you guys next time. Sweet.
The $1 Million Mortgage Experience Podcast.